Jason Goepfert is saying and warning us that the Sharpe ratio has peaked and is now beginning to roll over in the opposite direction. And what does that mean? Jason says that historically, whenever the Sharpe ratio has peaked and rolling over, hey guys, Alessio, hope you're well. In this particular video, I want to take a look at some important charts about the stock market. And I want to explain to you what these charts you're seeing here mean. And in fact, there's a special warning for the stock market for 2025. And I'm going to explain to you why the next several months could be one of the most difficult periods for the stock market we've seen so far. And why, according to one analyst, the easy time for the stock market is over. All right, guys, join me. All right, guys, welcome back. As you can see, I'm not in London. I'm actually in a really beautiful part of England, which is called Forestmere, just a lovely and serene part of the UK. All right, guys, let's go on to the charts. In this particular video, I want to talk about the stock market. And specifically, I want to explain to you in just a few minutes why there's a special warning for the stock market from the analyst Jason Goepfert. So we'll go on to that in just a few minutes. Before we go on to that, I have some interesting charts I want to share with you, courtesy of Elliott International. And by the way, if you haven't yet checked out the newsletter from Elliott International, I would highly suggest you give it a try. The link, by the way, is in the description. You get a very special discount when you go to this link you see here. So essentially, according to Elliott International, their research shows that the stock market is beyond overvalued. Now, you might be thinking, well, this is not news. We already know that the markets are overvalued. However, this chart shows it, I think, much more objectively and much more beautifully, as you can see here. So take a look and you'll notice that the markets right now, especially in more recent years, you'll see that we are beyond the average normal range for valuations. So this chart looks at book values and dividends, and look at where the standard normal range is. The standard normal range for valuations is down there. But look at where we're at right now. In more recent years, for example, 2021, 2023, 2024, look at how bonkers the valuations are. In fact, the recent valuation of the stock market is beyond average ranges, beyond standard deviations. So this chart shows beyond doubt that the stock markets are way overvalued. So you could argue something is needed, some major adjustment, some major retracement or downturn is needed to bring these valuations down to earth. And this brings me to the next chart. This chart is courtesy of Bob Prechter of Elliott International. As you know, I interviewed him last year. Let me just say this, guys. I have a lot of respect for Bob Prechter, and I actually appreciate his analysis. This is a very intelligent guy. But of course, we don't always agree on certain methods and wave counts. However, I think it is interesting to note that the stock market is currently in its last wave 5, the last major wave 5 of the long-term bull market that started way back in the 1920s. So going back nearly 100 years ago to the Great Depression of the 30s and also the Wall Street crash in the 1920s, you can see that we started a major bull market back then. And by the way, just to let you know, guys, that R.N. Elliott, the founder of Elliott Waves, in the early 1940s, he predicted a long-term bull market for stocks that would last all the way to 2012. Now, of course, the bull market has lasted beyond 2012, but we should remember that Elliott was predicting this back in the 1940s during the war. Nobody thought that we're going to go into a bull market at the time. Hey guys, before we continue, just a quick mention that if you're looking for a reliable trading platform with fast execution and great customer service, then look no further than Radex Markets, who is our sponsor for this video. Radex Markets offers you a phenomenal trading platform, and they provide you with real-time charts and data where you can trade stocks and stock indices, but also Bitcoin, crypto, metals, currencies, and a lot more. Again, check out the trading platform provided by Radex. I'll put the link for you guys in the description. And by the way, guys, any money we get from sponsors is given to charity. All right, guys, let's get back to the video. All right, guys, and if you look at this particular chart, again, courtesy of Bob Prechter, you can see that we're currently in the final wave. In fact, we're in the final 5th wave of the mega bull market that started way back then. And according to Bob, we're very likely coming to an end to this bull market. Now, I know what some of you are probably thinking. You might be thinking, well, Alessio, Bob Prechter has been very bearish on the stock market. In fact, he's been calling for a top in the last several years. Now, let me just say this. He himself admitted that he has been often quite bearish on the stock market, perhaps too bearish. And he himself admitted that the wave 5 has gone beyond what he expected. However, guys, I don't think we should just dismiss what Bob Prechter is warning about, because I do think that he is correct on this wave count. And I think he's correct that this major bull market has started back a long time ago, back in the 1920s. I think we're going to see an end to this bull market in this decade. Probably, if not this year, then in the next year, we're going to see a top in the major stock markets. And by the way, if you saw my previous video about the yield curve on inversion, that also supports this particular chart. That very likely in the next 6 to 12 months, we could see a major top in the stock markets and a likely reversal into a downtrend. Don't get me wrong here. I'm not saying the stock market is going to top immediately. That's not what I'm saying at all. All I'm saying is there are major warning signs about the stock market, which I'll come to in a few minutes as well. But as far as this chart from Bob Prechter is concerned, he is warning that this major bull market, and indeed the final wave, the final fifth wave in the bull market, could come to an end soon, if not this year, or perhaps in the next 12 months. And by the way, guys, what this chart also means is that the next bear market, the next major bear market, could be as bad as the Great Depression of the 30s, because it could be a major retracement to this entire bull market that could last almost 5 to 10 years. Now, I hear some of you saying, Alessio, is there anything out there that shows we're likely entering a change in the stock market, that perhaps we could be entering a dangerous period for the stock markets? The answer is yes. That comes from analyst Jason Goepfert of Sentiment Trader. According to a recent article from Barron's, they quote Jason Goepfert. And Jason Goepfert, who by the way is a fantastic analyst, he says something very interesting. He says the easy ride for the markets is coming to an end. In fact, in this particular article, Jason says the historically good run for stocks may be coming to an end. Why? Because of something called the Sharpe ratio. You see, guys, the Sharpe ratio is a measure of return to risk. In other words, how much you make for every dollar you risk in the stock market. Well, guys, Jason Goepfert is saying and warning us that the Sharpe ratio has peaked and is now beginning to roll over in the opposite direction. And what does that mean? Jason says that historically, whenever the Sharpe ratio has peaked and rolling over, this means firstly the easy ride for the stock markets is coming to an end, but also we could see a lot more volatility, a lot more ups and downs in the markets, which means we have to get ready for potentially a lot more false signals, like false buy signals or false sell signals in the markets. In other words, the easy period where you could just buy the dip willy-nilly on any drop in the markets may be coming to an end. Now let me just say this, Jason is not saying that the stock market has topped. So at the moment, there is no sign of a top in the stock market. That means the market could potentially grind a bit higher by perhaps 5 to 10% this year, but nevertheless, it does not mean it's going to be easy. We have to get used to a lot more volatility, perhaps a lot more ups and downs, and it does mean we have to become a lot more cautious about the stock markets. Again, as this chart showed, stock markets are way overvalued. And also, we're coming to the end of this major bull market. We're coming to the end of this final fifth wave. All right, guys, this means the next several months could be quite interesting for the markets. And I look forward to reading your comments about it too. By the way, guys, before I finish the video, again, as I mentioned earlier, do check out the newsletter from Elliott Wave International. There's a very special discount on this link you see here. I'll put this link for you guys in the description. And I look forward to seeing you guys in the next video update. Cheers.